Good afternoon, everybody. It is Thursday, May 19th, 2022, and we are going to talk alternative energy today. After last week's webinar on oil, I got the call to come appear on the Forex Analytics Face webinar. They do a guest webinar every morning for about 25 minutes. And if you ever get a chance, I would go down to Forex Analytics YouTube page and start going through some of their interviews over on the Face page. It's all free. You can watch it live. So if you want, go to forexanalytics.com and you can watch their webinars live. They have a very good show in the morning. So I would definitely take a look at that. If you're truly committed to trading, I think that you will like it a lot and learn from it. So we talked about oil and a number of other things. We talked about Bitcoin quite a bit. It was a pretty big interview. So if you get a chance, go there. Go to Forex Analytics web page on YouTube and go ahead and watch this video. All right, so last week's article or last week's topic was there really is no oil shortage. And as you probably guessed from the title, got a lot of strong reactions, 173 comments, and only about 25 are my replies. So, lots of comments, not a lot of likes. People don't want to believe that there's no shortage of oil because the price of gasoline at the pump is high, considering our recent history there. But, we still have cheap gasoline, petrol, compared to most other places here in the United States. And in fact, we're only short about 1.5 million barrels of heavy sour right now. That's why we had to release oil from the strategic petroleum reserves. And what did I tell you a few weeks ago? And it happened last week, is Chevron's cutting a deal with Venezuela. And if you were watching Bloomberg today, what you saw was one of their main oil guys say, we could send 600,000 more barrels of oil to the United States pretty much every day if you wanted it. But why don't you guys figure out how to get down there? So I thought that was pretty funny on his part, actually. There was a shot at not finishing up the Keystone XL pipeline. But of course, anybody who really knows that story knows that the company that was building it just didn't take real great care on picking out good spots to put it, which is why Michigan is trying to shut down one of their pipelines. Just not a real good safety record for the company. And I won't mention their name because I don't want to hurt their feelings, but, take a look and what you'll see is that, yeah, pipelines are great if they're taken care of well and they go through the right areas, but they just didn't handle it well. That pipeline should have been built 6-7 years ago, and it never got done because they never did the things necessary, and there was a path laid out to get it done. They just refused to follow the path. And, then they turn around and blame everybody else, and it goes political. In any case, I laid out why there's no shortage of oil. There's disruptions, certainly, and manipulation by OPEC, but there's 50 plus years of proved reserves on the planet right now. So it's not like exploration is somehow hurting this. What it is that Saudi Arabia has decided to pump a lot less oil. That's really all it comes down to. Take a look at this chart. It's pretty easy to read this one, right? They put oil, down into a hole, so to speak, and they just slowly ramped it back up. But they're still not over 30 million barrels a day, which is where they were. If this chart goes back, they've been around 30 million barrels a day for a long time, 30 to 31. This production here was high. This was when they were killing U.S. oil companies. But 30 to 31 was pretty common. And when it got to 32, 33, that was kind of high. But, they still haven't got to here, which is where they should be. So they really should be putting out another 1 million barrels per day. They've chosen not to for all the obvious reasons. And, it has nothing to do with not enough exploration or proved reserves. There's a lot of proved reserves. This is from BP. It shows that there's nearly 50 years of reserves. So it's not a shortage of oil. It's other things. In any case, refining is a different story, which is why I focused on one of the stocks that I focused on. I talked about it on Monday, and I made it a buy alert last week. You should have gotten 2 chances now to buy the biofuels refining company that I like in California. I'm not going to mention it here. Going to try to keep away from stocks for the most part on this program, unless they're very germane to today's topic. So we will actually cover 4 alternative energy stocks here at the end. One thing to keep in mind is that if oil's not in a shortage, but energy is going to be a little expensive, how is that going to play out and why? It's the refining shortage. There's 1.5 million barrels per day of refining capacity that the United States has lost over the last 2 years, really during 2020, and another 1.5 million barrels per day globally. So about 3 million barrels per day globally of refining that's fallen off, and that's tightening up the distillates, the fuels. So anywhere where you can find new refining capacity that's coming online, that's probably a pretty good place to look for profits, because you know that nobody prices it in. Oh, they're not making money right now. Blah 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 blah. Yeah, but if they're about to put on new refining capacity and they're getting contracts for it, which they will, then they're in good shape. Here's what we know: not a lot of those stories around the world. Not a lot of new refining capacity. We found one in California, so we're investing in it. Always remember, if it's good for fossil fuels, it's better for cleaner energy. And I say clean here, but I can also say cleaner. Incremental improvements, which get argued about all the time by the far left, aren't always seen as the greatest things, but sometimes they're the only measures that can be taken in the intermediate term to, almost long term. So this refiner, this biofuels refiner in California, that's also doing carbon capture and getting tax credits, creating renewable natural gas. Very interesting story, right? Because now their margins are essentially going to be double what a normal refiner would be, and the company's priced at $300 million of market cap, despite projecting out $5 billion of total revenues over the next 5 years and getting to $1 billion a year and higher at some point. So, we'll see. And I would argue pretty strongly that we are already seeing the results of the Russia war. There is a huge movement to accelerate the clean energy transition. In the United States, we have to go through Joe Manchin, so it's going to take a form that's different than what's in Europe. In Europe, they're really trying to push solar and wind and batteries, and they're putting everything together to do it. In the very short run, they're even going to use a little bit of coal just to get over Russian natural gas. I have argued that the United States is in a great spot to send them liquefied natural gas, and we have an investment in that too. A company that has the ability to put an LNG processing plant on the water at the wellhead. Pretty neat. And then send the ships off straight from essentially where they're pumping the natural gas. There's already several contracts in place for that, more coming, and Europe's going to end up getting a lot of American natural gas from a particular company. You need to buy it on the dips. We haven't got any dips lately, but if we get one, it'll be maybe the last chance to get it before their revenues just go through the roof with all these other natural gas platforms coming online as they put them together. The EU is getting ready to pass a law that we've seen in California, and I've told you is going to come to most of the world, is that new buildings are going to be required to have some form of alternative energy built in, generally going to be solar. Wind turbines in the middle of a city aren't always good. They cause some problems for a lot of people. But solar panels, those are going to be up and getting slapped up all over the planet. And to not expect that to happen because of some reason, like, oh, we're short on silicon. Short on silicon, we just don't have enough processing yet. That's coming. We know that that's coming. We know that all that processing is coming in the next 3-4 years, and that it's already started. Don't think that solar power and batteries aren't going to start helping to decentralize the grid a bit. I know that the transmission lines are going up for a lot of different projects. They're overbuilding capacity. I know this. One of my best friends is in that industry, and there's going to be quite a few upgrades to the grid incrementally over the next several years that are going to kind of blow your mind. Overlap, the ability to carry energy that's intermittent. There's a new technology out there. I forget what it's called. One of my electrician friends at a big contractor here in Milwaukee was talking about it. Essentially, the ability to switch on and off through pulses electricity through fiber optics. So we'll see how that manifests. But this energy transition, this energy revolution, I called it an energy technolution 10 years ago. I never really took. But the technology involved in moving energy, in collecting energy, storing energy, is just moving so fast that they are training the installers and the engineers on the fly. So, that'll create some minor problems. But you're going to see all of this stuff accelerate quickly because the laws, right? The phase 2 of our process, our 4-step process, find the secular trend, find the government policy and bank policy, take a look at the fundamentals, then figure out the technicals and how to make the trade. Well, the government policy is clear of what's going to go on here over the next decade, and you should expect it to gradually accelerate even faster and faster. We're going to have years where the growth rates are in the 50s and 60s probably, and it's going to be fairly amazing to see how fast the grid gets upgraded as EVs start to take the cell phone curve, right? So cell phone adoption wasn't huge the first 6, 7, 8 years, and then it was S-curve, went straight through the roof, right? It was suddenly, after 7 or 8 years, 7 or 8 more years, a mature industry. The same thing's going to happen with EVs. 2026, 27 are the years where it really hits that pivot in the curve, and you're going to see EVs start to adopt like cell phones. It doesn't even matter who wins in 2026. By then, everything's in place. So somebody asked today that we take a look at the indexes real quick. So the S&P 500 is right at that top support. Will it hold? Well, it's bounced a little bit, right? Kind of jitterbugging in here. If we take a look at it on a daily chart, it's easier to see, right? A little bit of jitterbugging, came down in here, bounced off, came in here. Now, if you want to take a look at the fib lines, I draw them from different places, depending on which level. Do you want to take a look at the 2014, 15, 16 basing period, which I think is a pretty legitimate long-term super support in the market? If we got all the way back down here, that would be our Armageddon zombie apocalypse event that would unleash the Fed's fury again. From here to here, I think is probably a little bit more realistic. Just make sure this is the right place. On the weekly chart, get a little bit more. Okay, there you go. So you take a look and you say, okay, well, where are these fib lines? 0.618 is way down here on both of them, the longer range one and the shorter range one from the COVID bottom. So you have fib lines right in here, right where I have this major support, X a recession or black swan. So if we can avoid a significant recession, I'm not just talking about a couple of bad quarters here and there scattered in. I mean a real change in unemployment where suddenly we have people unemployed again. It would take a lot to get below right around 300 on SPY. Jeremy Grantham is afraid that we get there, and he's a pretty smart guy. So you have to keep this in mind. You can't go 100% all in even at 300, especially if there's significant downward momentum at the time. So as it comes down, as it gets around here, we're going to have to say, okay, how big is this downward momentum? And if there's still a lot of downward momentum, you have to tap the brakes. You just got to keep sitting on your hand, sitting on your clicker, and not get in, because Jeremy Grantham is afraid of this. And I think he's really afraid of this. But, I wanted to have different zones. So I put the Jeremy Grantham zone down in here. He has actually kind of talked about this area, 200s, low 200s on the SPY. But again, I have talked to you for several years now, since in here, that this is the base area. This is the super support. Could we ever get down to that super support, right? 170, 180 on SPY? Probably not, but it doesn't mean that it's out of the question. So we have to keep an eye on events as they happen. QQQ, same thing. And in fact, this zombie apocalypse zone is just a little too high. That should really be down here. There you go. That's the zombie apocalypse zone for QQQ. And the reason it's a little higher than SPY is because the companies at the top of QQQ, which also are at the top of SPY, they're more focused, they're more concentrated in QQQ. So when you have Apple and Microsoft and Google and Amazon with more money than God, at the top of QQQ and Facebook, and those 5 stocks are like 40% of that index, all you have to do is ask one question. How cheap can they get before, they're basically trading at cash value, and that those prices are down in here. So the odds of setting new lows, new 5-year lows on QQQ, getting all the way back to 2018, pretty slim. Doesn't mean it can't happen. And it's not out of the realm of possibility that it gets down to the 2016 level. I just think it's remarkably unlikely, given that there's just so few real losers in QQQ, and they're not all that terribly overvalued against even subdued expectations of earnings. So here we are. We're a little bit lower relative than where SPY is. It seems like it's going to go through this first level of support. And I think, here's your 618 line right in here. Very strong support, 225, 240 right in there if we don't get a recession. And like I said, I don't see a horrible recession. I don't really see stagflation that really takes hold. I just see whiffs of both things. I think whiffs are what we're going to get. And as I said a number of times now, I don't believe that the Fed allows us to go into that situation, given that they just have so much firepower. And they know that cheap enough capital to make sure the supply chains get built out is important. And they also know, and I'm going to make this an article title, that demographics and robots are destiny. So demographics is destiny is a very old phrase. I'm going to change it to demographics and robots are destiny. We're going to have a lot of robots doing things that people don't want to do anymore. And it's already starting to happen. It was one of the things they talked about at CES 2020, that even middle management tasks are going to be handled by AIs, just really to help people structure their work rather than having somebody annoyingly standing over their shoulder. So I think you're going to see more automation. I don't think there's any question about that. That's part of fourth industrial revolution, and that is one of the ways that we are going to get over the demographics issue that really most of the world has. There's several really well-positioned emerging markets that we've talked about, including India, and the United States is in better position than the other giant economies. We're in better condition than Europe. We're, with the exception of Eastern Europe, but the EU in general, we're in better shape than. We're way better shape than Japan, and we're better shape than China. So we have a relative edge among the 4 giant economies. India will soon be a giant economy. I mean, they're well on their way. So you shouldn't really bet against the United States, because all those advantages that we have in general economically will, still be there in 50 years. What we have to be aware of, though, is those times where we get over leveraged and overhyped and we create bubbles. And I showed with the valuation charts that we were clearly in a bubble, really from about where we are now. I mean, we're finally approaching a range where you could say, well, we've been in this range before. We were never in this range before. This is more expensive than 2000. Now we're to the point where, okay, it's overvalued still. It really is still overvalued, but not a lot. I mean, down here, we're at fair value. And that's one of the reasons why on both charts, right, they're similar. This major support just happens to be roughly at fair value. And that's, I think, important. And I think it's important to the Fed. If we got below the boxes, below the bottom fishing, then we're truly undervalued again, which we haven't seen in a long time. And even this wasn't undervalued at the time. It was probably fairly valued, because now earnings are even higher as earnings have consolidated. And we should expect that inflation will come down at some point. So where do I want to be given this theme on energy? PBW is one of our ETFs. Low 30s is bottom fishing. Shooter said 28 or 35. And when he has primary setups, which we're basically at the first one right now, this is an older chart, but they only get updated really once a month. Then you can scale in if it keeps going. So 48, 35, 28. That entry number 3 is pretty in line with my bottom fishing. So is that 35. So you can usually skip the primary wave setup if the overall market is bearish at the time. If it's bullish, you want to jump in. We're clearly bearish right now. So you're looking at these entry level 2 and 3 entries for him. I'll get him to update some of these soon. Probably at the end of the month would be the best time to do it. That's when you get the best charting. So look at PBW from 35-ish down to 30-ish. The holdings here, pretty diversified. Don't even see some of our top ones here. But it is, it is a global fund. And in general, it's been pretty good. QClean, QCLN is also pretty similar to this. If you have a tax loss on PBW, you can sell that today, switch over in the QClean, and you still get the tax loss on PBW because they're not identical funds. So you can basically have a similar fund that's not the same, just flip it over from PBW to QClean. And, if your accountant says something about that, I didn't say what I just said, it's not being recorded. Okay, it's being recorded, but you could probably flip from PBW to QClean if you have, if you bought PBW at 60 or 70 or something, you just want to collect the tax break. QClean has been very similar, and you can take a look at that. Right, pretty similar charts. If we shorten it up, even more similar. In fact, QClean even beats it a little bit over certain time frames. So the more recent time frames, and the holdings fairly similar as well. A little bit more of our companies that we're familiar with: Enphase, Solar Edge. You have to look at them at the time, and this is a lot more top heavy. So PBW is a little bit more diversified, and I use that one because I'm going to add my half dozen favorite alternative energy stocks. But if you were just going to do an ETF and you weren't going to buy stocks, I'd actually probably buy QClean if you weren't going to pick out individual stocks, because then you get some overweighting to the companies that are scoring out the best, because there is a minor league quant formula here with this ETF. TAN is if you want to go pure solar. Again, it has performed pretty similarly to PBW and QClean. See that they're all pretty much moving together. Not a lot of differences. The PBW trailed in this time frame. TAN, there you go. These are, if you really want to focus on solar, this is the fund to go with. It's really the only game in town. You can play options with it, which is a pretty attractive. This is pretty attractive to use options with. You've got the two companies here that are a duopoly in the power management. You got First Solar, which is doing well and is protected by tariffs. Sunrun, Sunpower's in second 10. Atlantica, that's on our list. So this is a pretty good fund. Depending again on how do you want to build your portfolio. Enphase has hit this support line twice. Shooter thinks that the bottom might be in, might get back into here. But if it does break through, then it probably does go to bottom fishing. And in fact, probably get down here into the low 80s. I think that it's probably right to use this longer term time frame. It's 2016. You start to see where certain levels of interest were. So right in here, which happens to coincide with 786. So yeah, low 80s. I think low 80s is probably about as low as you would get with Enphase. Again, presuming there's no end of the world, Armageddon, a zombie apocalypse. And again, if we drag this out to 2016, which I think is something that at least has to be considered right there. And you could see this one fall all the way down to 100-ish. I don't think it will. I think it's going to catch in here somewhere, but we don't know, and we have to measure it when the time comes. Shooter was kind of stymied on this one. It's come down quite a bit since he did this chart in April, but this looks like a turnover, and his 200-day was 162. So where is it right now? 252. So Shooter could see it getting right in here as well. So that's interesting. Right around the 200-day, 162. So that probably means that I'm a little too low there. That space right there is a change in sentiment. So that's 156-ish, which again, not too dissimilar from his 162. Sunrun is in the buy zone. If you've been to Costco, you see their signs coming up again. And I think that right about here, 6-ish, you'd probably have to sell children and buy as much stock as you could. I think it's worthy of buying right here. But I think that you can probably, I'm gonna have to think long and hard about where these lines make the most sense. This was just the choppiness. Then it broke out, but it was on decreasing volume. So there's not a ton of people to sell because it was decreasing volume all the way up. But if it does fall anymore, right about there, about 18, 19, 18, right in there, that looks pretty firm. That doesn't mean it can't go down one more level, down to 14, 15. And then on just a low volume market where nobody gives a shit about anything, could it keep falling? It could. That's why I have to measure it in real time. And my guess is that those things don't happen, but it could. I mean, there's no reason why it can't. I am going to move the bottom fishing right there just because of what I think. I think that this is an important quantitative level, right? That's kind of like max amount of people wanting to get out because they start to lose money after having bought it in this area. You understand why that is, right? People don't always sell on the way down. They're like, oh, it's going to turn around. It's going to turn around. And then they get to the point where they're like, well, geez, I'm at my cost basis. I want a real loss. And they accept the waste of time of round tripping, but they don't sell until they've actually round tripped. It's really weird. So I think that right here, probably a pretty legitimate bottom fishing at about 15. I'd have to take a look at the VSL to know what I have it set up at. Then you got Sunpower, which I think is the strongest company in the space financially. Could have one more wave down. If we can get this really close to 10, 11, 12, oh my gosh, I never thought I'd see the day. Shooter says 17 or 14, his primary targets. So 14-ish on Sunpower, which I think we actually just saw that for a hot minute. Let's pull these out of here. Oh, we almost got it. So we got 15. I mean, that's pretty good charting on both of our parts, I'd have to say. Yeah. All right. And he had another one where he had to move it down. So 17, 14. Oh, yeah. These charts are a week apart, and they didn't change. And that's what I mean. With these Elliott wave charts, we're using the weekly measurement. It usually takes about 4 weeks for these to change. So 4 weeks of substantial market movement to make this chart change from this chart. I mean, these are basically the same chart, and they're a week apart. So we need the weekly measurement to change. The turtle traders way back in the day used 4-week measurements, and that seems to be pretty consistent, right? 4 weeks, a month. That's really when we get a good viewpoint on what a new trend is. Is a pivot really happening, or are we just getting the jitterbugged patterns, regardless of which one it is, whether any diagonal, leading diagonal, this thing, that thing, whatever. I just call it jitterbugging because there's like 20 different names for the things that can happen, and probably more. And it doesn't matter. It just doesn't matter. When the rich people get interested in buying, that's when you want to buy. Bottom line, that's what it comes down to. When the big money starts to move in, don't wait to see. Just trust that the big money knows what it's doing, because it's a little bit of self-prophecy, right? The big money pours into something, they're going to drive it up themselves because they shrink the float. They shrink the supply of stock or ETF or gold or whatever it is they're buying up a ton of, TLT, 20-year bonds, whatever. I'm actually going to throw TLT up here for a second before we close out. And I will tell you, I set this buy box up. It was a pretty long time ago. And I think it was actually before the COVID crisis, because I wouldn't change this. So I probably set this up December 2019. And when TLT was way up here, 150, 160, 170. And look at this. All of a sudden, we're way back down here to the top of the buy zone on TLT. I think that interest rates are going to start coming down by the end of the year. I don't know if it's going to be September. I don't know when the market anticipates it. That might be July or August. We'll have to watch and see. However, if they back off in September or give a hint in August, in case August is rough, that they're going to back off, and TLT is going to, boom, zip back up as interest rates go back to almost zero. I asked Dale Pinker today on Forex Analytics, do you really think that ZIRP is gone? And he says, well, I think there needs to be an interest rate correction. I'm like, well, I think that we're going to see close to zero interest rates again in the not too distant future, probably a year to 2 years out. I think they'll stop raising interest rates and probably stop QT, or at least stop increasing QT by September. I really think September is a pretty big deal month. And the only way that that wouldn't happen is if there was some sort of oil manipulation that pushed prices up and created some hot inflation numbers. But really, the inflation numbers are clearly flattening out right now, which means that the next thing is they're probably going to turn over. The only thing that prevents them from turning over is some sort of exogenous event. And we'll see. We'll see if that comes. But there's money pouring into moving the supply chains, creating the supply of metals that we're going to need for the energy transition. Venezuela is going to try to figure out how to get some oil shipped, and it's going to be drips, for a year. But, if they move in that direction, tell you what, American engineering, technology, and experience in the oil patch move things a lot faster than you think, I think, especially since I don't really have any doubt in my mind that the U.S. government's going to help support that. They're going to pay people to go to Venezuela and work. And the engineers and the people who haven't been in the field for a while are going to say, pay me time and a half and pay for me to live in Venezuela for a year. Yeah, I'll go. And that's the way it happens. Whether it's Halliburton or Schlumberger or Baker Hughes ends up working with Chevron. I think you're going to be surprised at how fast the deal can get put together. And I think you're going to be surprised that the U.S. government ends up probably guaranteeing a lot of the financial risk for Chevron, the same way they did for the banks years ago. And I think they're going to overpay people to go over there and work. Start putting it back together. They'll put together the first piece, proof of concept, then they'll put together another one. They'll start building out their teams, and then they'll build out everything over, the second year probably. So if we can get 1 to 2 million barrels a day of oil from Venezuela, and they need about 500,000 themselves beyond what they have. Now all of a sudden you're looking at Venezuela and going, I think that you should have a lot of hope for Venezuela. The same way, in the very long run, if the mullahs ever are not in control of Iran, Iran has a culture that could be very relatable to Americans and people in the West. So don't throw out the idea that other people just want to be happy too, and they just have to go through the process of getting to the place where they need to be as a nation, as a people, as being governed. And this goes through cycles. It always has through history. I'm a lot more hopeful than I think a lot of other people are, but I have a pretty good understanding of history. And unless we have like the horrible, horrible war, things get better. So as long as we avoid the big, horrible war, things get better. It just is a function of time, and things get better. Given where technology is too, and I just can't see anything but good things as we get later and later into the decade. We're just in a rough patch right now, and the Fed is there to backstop it, whether they say they are at the moment or not. And I guess the last thing I would say was with Powell. I don't think he has a Volcker complex. I think he's talking the game right now. I really do. If he looks at himself as Paul Volcker and he's got to smash the economy to fix inflation, I'd be surprised. I think he knows that long run, we just want to see the bubbles pricked, and then we want to get back to supporting growth and transition to a better sustainability position, which ultimately is going to include water. So that'll definitely be a theme over the next year or two. All right. That's all the breath I got. I will let you go. I will get this up. I hope that we go over to the Forex Analytics webinar. They call it FACE. I don't really know what that stands for. But there I was at the 34-minute mark. But I think you should watch the whole thing. Set aside an hour, watch the whole thing, maybe turn it up to 1.25 so it only takes 45 minutes, especially with me in there. You're going to want to speed it up. Although I've been trying to talk faster. I'll never get up to New York speeds. It just ain't going to happen. I can't walk as fast as them in the subway tunnels either. So, I have no idea how they move their legs that fast. I have no idea how they talk that fast. But they pull it off. I can't do it. All right. Have a good night. Have a good weekend. I'll actually be working tomorrow. My baby time got switched to Sunday night. I want to be the Sunday night babysitter and go and babysit both of them at my daughter's house. So there you go. I'm officially a babysitter again. All right. Take care.